Okay, guys, this is Farid Premani with Live Trading, School of Futures Trading. So, we have started this social assignment and we are trying to create setups so that people sitting in third world countries as well as North America can make second income earning. Like we have tried different things in the past, this is another strive. So, hope you all get successful in that. Today is December 14th, 9:42 p.m. Central Time, and we are trying to see here the futures strategy for gold, and we saw that there was a big downfall on the 4-hour chart, which we can see here, and this was kind of a big candle formed. The logic that we got here was this is a top, which you see, and then this is the bottom. And then it's now trying to get retraced, and you see such a big candle was formed here, which is normally not the case. This is normally called in the world of trading as dragon candle. So that dragon candle, you just see the level of and the level of wick. It took a bit time to get back to this retracement level, and we feel that it should start to fall down back again. So we are trying to get in a short position with the stop loss target on the top and then the bottom target around these corners. What are these level again? 4388.5 is the stop loss target, and then 4286.8 is the profit target. It's right now 1 is to 2 ratio. We are trying to take a big move here down, but on a small trend line, we are trying to analyze this as it's a break of structure, break of trend, and we saw that alligator's mouth and EMA cloud is also getting to an end. The momentum is trying to exhaust right now. And on a different WD GAN method, Elliott wave analysis method, the Fibonacci method, we feel it's trying to come down to a point where we see it's trying to now break the trend line, and now it's trying to bounce back on the reverse side. See, we can be wrong at any point in time because at the end of the day, it's analysis, and lots of analysis and a fake news, breakout, market makers, anything that can put you down. So again, the maths is the same. If we are in a $1,000 account, let's say for example, you try to risk only maximum $100. So let's say if your $100 is lost here, let's say you try to make $200 here. Okay, and this is how mathematically you have to position size. So let's say on this position target, you would be actually making about $250 to $280 because 1 is to 2.5 is the risk reward ratio. You have to be very cunning, and despite of all the mathematics, all the geometries, all the live analysis being right, you can go wrong. Okay, because it's market. If you will be winning all the time, you'll be the richest man on earth, which is not the case right now. So go firm, go with the lower position size. And normally, if you can go with 5% target, that's even better. Because what happens in 5% target is you can actually, so let's say if you divide your 100% into 5, you have 20 chances, right? And then 20 chances means out of 20 times, if you are right 70%, let's say, and your risk reward ratio is 1 is to 2, then what happens? Let me show you what happens here. So what happens in this case is, give me a minute. What happens is if you're right 70% of the time, so you lost out of 20, how many trades? You lost, let's say, you won 13 trades and you have 2x the money, and you lost 7 trades and you have lost it one time because it's 1:2 ratio. So you lost 7x, but you made 26x. Okay, so 26 minus 7 is 19. So still you made about, let's say, with $1,000 in account, you would make $900 with this ratio mathematics. That's the bottom line. Okay, so let's say you would lost, if you are losing, if you're trying to kind of make a situation, let's say this is $100 loss. So let's say my suggestion would be you position size that you are 50 here and you are 120 here. If you won, you make 120. If you lose 50. Okay. And there are a lot of trading recalculators. There are movies, not movies, there are training videos on acem.co that you can see how we position size on our Facebook group. So acem.co. But long story short, this is a live trade and I've made it like a whiteboard, but that's okay. But what you try to see here is the important point is if you are losing still 30% of the time, okay, 7 out of 10 times you are right. So you are correct 14 out of 20 times, okay. And all the times we try to at least take a risk position of 1:2. Means if you lose 1x, you see how the distance from here to here is, and here to here is, this is 1:2 more than 2. So let's say if you lose 14 times, if you won 14 times, you will won 2x. So your account will be at 128 times more. But if you lose 6 times, you will be losing 1 time only. So if you do the math, 28 minus 6 is 22. Okay, 2.2 times you are gaining your account. So let's say if you start your account with 1,000, by the end of month, inshallah, you will be at 2,200. That's the plan. Okay, it could be 2,000, it could be 1,800, depending on position sizing. There are future fees and all. And right now, what we are trying to do is we are trying to play with, this is the future desk, you know. So we are trying to clear the test, and why we are playing with our own money, but we are actually also helping many get the funded account. So with a small fee of 100, 150, $200, whatever broker they use, they can get a 25 to $100,000 fund. And on a $100,000 account, inshallah, if they pass, after first is the buffer phase, then it's the evaluation phase, and it's the active money which is given in the funded account. Some says that buffer, sim, and active. But normally there are 2 layers or 1 layer if you pay more. Let's keep 2 layers, which is a cheaper test. And normally what happens is on 100,000, you have to make $5,000, but you can lose 3,000. So your losing buffer is 3%, your winning buffer is 5. And that's why we are trying to say that if your losing buffer is 300,000, then you lose in every trade $300, but you try to make in every trade $500. So inshallah, after 20 trades, you will be able to be at $10,000 profit, and you will be able to lose $3,000. So your net gain would be 7,000 and your target is 5,000. So you will be inshallah more than $2,000 more than target. And normally the split is 80-20. So you keep 80% profit, broker keeps 20% because they are giving you the money from investor. So that's how inshallah with that small 150 $200 fees you can make $2,000-3,000 a month easily. But that's why we are trying to help you with analysis, and we are trying to, it's a number game, we are trying to be 7 out of 10 times correct. Okay, and this is live trade, and we are showing you our negative, our losses. You still see we're in a $2,000 loss, right? Why? Because we are over position sizing, and we are still trying to, but we still have the buffer limit. But my thing is, I'm taking bigger trades. You don't need to take bigger trades like me. You can take smaller trades. Instead of 3 position size, you can go with 1 position size. Okay, so you don't blow up the account. Try to break down trade into 10%. Better if you can do 5%. Okay, I'm trying to do over position leveraging so I can clear account fast, but that's okay. If you think you can keep on paying the funded account fees, that's okay. But slow and steady wins the race. So hopefully this helps you. But my intention for the funded account is to help many who don't have liquidity. They can inshallah work out that thing and they can make it or break it. And we don't charge anything here. It's just a social experiment again to help you. So remember and praise and inshallah. This is our stop loss. This is our profit target. See you. Take care. We'll talk tomorrow. We'll see because this would take 3-4 hours